Good afternoon, everybody. How is everyone doing? Great to see so many people joining already. Fantastic. We're just starting just a little bit later, just out of respect for marking the day here in the UK. So now it's time for us to get started. How is everyone doing? Let me know. Really excited for today? You get to see my wonderful face again. Maybe for those that weren't able to join in on last Thursday, we had so much positive feedback, and Andy had even asked me to do the live for myself, to do it again for you guys as well. So thought it would be good. So I'm just going to quickly go live in Facebook as well, guys. Just so there's recordings of it and so on and so forth for our students. So I'm not that much of a technophobe now that everything's working just fine. Amazing. So guys, this is a quite important session for a lot of people. We're going to be covering trade plan, learning how to actually build a trade plan that's suitable for you, having a consistent system that allows you to essentially gain consistent results. Okay. Loads of people struggle with this. Loads and loads of people struggle with it because as human beings, we're always looking for like the next best thing, learning new stuff. And it can lead to a lot of strategy hopping. It can lead to information overwhelm. It can lead to you kind of chasing after the next big shiny thing. And it means that you have an inconsistent approach. Okay. So what we're going to cover today, we are basically going to cover, why are traders, that may be even yourself, why are you inconsistent? How can you become consistent? And then I will show you a template of my plan and how you can maybe develop something for yourself. All right. Just put a Y, like a yes in the chat box, just to make sure you guys can hear me. Make sure that you're ready for the live, because I always recommend, like, look, get a notepad and a pen to hand. There will be a recording, but if you take notes throughout, it'll be much better for you guys. The more interactive you are, the much more you'll get out of today's session. Amazing. Fantastic stuff. Nice to see people so active. Great. Shows that you guys are serious. I like it. Awesome stuff. Right. Let me share my screen with you. Okay. And we will crack on. Now, this is a lot of stuff that the majority of people, whether that be other trading companies, individual coaches, they won't really share this stuff with you, not to the extent I'm going to today. Okay, so you should now just be able to see a blank screen. I've taken my beautiful face off just so we can maximize it. Okay, so today we're focusing on trade plan. Okay, trade plan. The very, very first thing you guys need to be aware of is you need to really be self-aware. Understand what the issue actually is. A lot of people can't come to terms with whether they're actually inconsistent or not. Some people have very, very short-term thinking that, you know, they could have lost a bunch of money, and just because they've won for a couple of days, it means they're now profitable, right? But we need to look at it from a realistic perspective, okay? Why are you inconsistent? Okay. You have to ask yourself that. I always say to my students, the reason why people are inconsistent is because they have an inconsistent approach. An inconsistent approach equals inconsistent results. Okay. And that I recommend for you guys to note that down if you can. An inconsistent approach means inconsistent results. You cannot expect to be consistent and gain a consistently profitable income from trading if you are using different things every single day, finding different opportunities and not sticking to something that has been proven to work. Okay. So this can lead to people strategy hopping. Okay. Apologies for my awful writing. You know what we might do is we might even just do this. We'll pop in a little text box. So strategy hopping. Okay. It could be leading to stuff like information overwhelm. How many people suffer with that? So people hopping from strategy to strategy, they see the kind of the next best shiny thing on YouTube or on TikTok, or maybe they've been with kind of other trading educators, and they can't stick to one thing. Or they've learned so much on YouTube, so much on TikTok, so much on apologies for any kind of background noise, guys. It's we're just in an office at the moment, but it should all be good now. Everything all good? Let me see if I can just sort out the audio here. Okay, great. All good? You guys hear me okay? Yeah, following along? Just wanted to double check audio. Just pop a yes in the chat if you can. I don't want to continue along if you guys if you guys can't hear me clearly. Okay, amazing. Awesome. Okay, so trade plan. We'll continue. Strategy hopping. Information overwhelm. Something what we call analysis paralysis is always a really good one. Well, not necessarily good if you're experiencing it, but the people that do loads and loads of work, they commit hours and hours and hours into their trading, but they don't execute anything. And when they do execute it, it's not good enough, maybe because they've gotten a little bit impatient. You know, that could be quite a big factor within it. Okay. Some people struggle with their emotions in general. Trading can be an absolute emotional roller coaster. The biggest ones are fear and greed. People putting their stop losses too tight, going for too much of a return on their investment. The tighter your stop loss, the more at risk you are of getting stopped out. You have to understand that. People having their targets way too far away, again, trying to get too much of a return on their investment. They're kind of seeing that big pot of gold at the end of the rainbow, and they just never reach it. Okay. So if your target is too far away, you're less likely that it's gonna go ahead and reach. And it's a really, really fine balancing act to kind of get this all together. That's why trading is a profession. It's not a hobby. You know, big institutions, big banks, investment banks, pension funds, you know, all of the big whales within the market, They all treat it as if it's a profession, because it is. And you guys need to be able to compete with these guys. Okay. So these are usually the main reasons why people are inconsistent. And the list really, really does go on. Okay. So I guess following on from the why is how can you become consistent? Okay. How can you become consistent? Any recommendations in the chat, guys? What do you think? Some of our students will probably already know some of the answers to this. But let me know your thoughts, your recommendations. So we understand people are inconsistent because of their inconsistent approach. Okay, Zach, so you're saying, okay, trade plan, stick to a trade plan? Absolutely. That's what today is all about. Trust me. And then we'll go into some live trades and analyzing the market using the system. Keeping up with the trading plan that you think is working for you. Yes, Brandy. Jay, master 1 to 2 strategies. Fantastic. Yeah, don't do too much with it. Okay. Right. So if you guys want to become consistent, there's a few elements. All right. Number one, a consistent approach equals consistent results. And trust me when I say, I have never met someone or never met a trader that is losing money in the long run with a consistent approach. If they're doing it the right way and they're optimizing what they're doing, they're reviewing what they're doing, and they're using the same stuff and they're trying to improve, there is no scenario where you have a consistent approach and inconsistent results. Okay. You're either making money, break even, losing money. Okay. And either way, they are good scenarios. If your approach is consistent, it means that is, if you're making money, great. You can try and optimize it to make more money. If you're around break even, well, figure out what's going on. You're taking the same setup every single time. Your approach is consistent, right? Figure out what happened with your winners. How can you find more of those trades? With your losers, what went wrong? Again, how can you improve them? How can you make them into winners? And if you're losing money, if you've got a consistent approach and you're consistently losing money, it's very easy to figure out what is going wrong. The issue is the majority of traders, they'll take 30 trades in a month and all 30 of them will be completely different. Different setups, different scenarios, different markets, different risk management. That's the last place you want to be, because it's a very, very difficult rabbit hole to get yourself out of. Okay. And we don't want to be kind of backed into that corner. A lot of people are. And now is the journey to kind of back yourself out of that. You know, dig yourself out. Today is the day where you're going to be at least having a consistent approach. That's the aim. All right. So consistent approach equals consistent results. All right. Now, it's really important within your consistent approach that you use the same tools. There's so many tools that you can use. I mean, within London Trading Institute, we have a really cool tool called Trade Detector. We have CSI, which is our currency strength strategy. You can use more widely available tools like RSI, stochastics. You can use MACD, one of my personal favorites, moving averages. Okay. Bollinger Bands, you know, there's loads of tools that you can use, but it's really, really important that you use the same tools in the same way every single time. So you're finding the same setup. Okay. If you find the same setup every time and you execute it the same way every time, you'll become more consistent. All right. Now, another one is you want your approach to be simple to execute. Okay. Sometimes simple is better. The easier it is to execute, the easier it is to understand. Usually, the easier it is to get results from it. Okay. And some people, it takes a while to understand this, that you can still make money with a very, very simple approach. But what matters is your execution. If something is easy for you to execute and you have the right knowledge, the right guidance, the right experience, you're consistent in your approach, in the long run, you'll make money. We'll all experience losses, right? Even to this day, we experience losses. Like, look, this morning, I got stopped out on 2 trades straight away within about 15 minutes, right? But it's all built in to my overall longer term plan. I know if I continuously find setups like it every single day, in the long run, I will make money. Okay. And losses are all part of the plan. Okay. So keep it simple. We always say, keep it simple, stupid. Okay. It's essentially this. Okay. Really important that you guys follow that. Now, finally, when you've got this kind of simple to execute, consistent approach, what a lot of people fail to do is like the admin work of trading. Okay. The admin work of trading, the most boring part, which is journaling your trades, reviewing your trades, and repeat. Okay. I can't tell you enough the amount of people that miss out on this. Let me be honest, guys. In the chat now, let me know who actually journals their trades or who doesn't. And be honest, because now's the time to like hold yourselves a little bit accountable. It's like, some of you guys are complete beginners. Some people are intermediate. Some people are advanced. How many of you actually journal your trades? Just put like a Y or an N, yes or no. Just let me know. Okay. I mean, don't get me wrong, guys. It's not surprising. I see a lot of no's coming through. A lot of the yeses that I see are students that are kind of coming through with us. Fantastic. It's good to see that you guys are doing what we say. But there are a lot of no's. And that's really, really common. Okay. Usually it stems down to people not knowing how, not being bothered, people either having a lot of time because that you're not having a lot of time, because they're working full time or looking after children or whatever, right? But if you want to be successful in trading, once you've actually executed the trade and done your stuff, this is the most important bit. Seriously. Okay. I'll give you an example. Some of you guys, let's say we compare myself and some of you guys in the chat, maybe like someone who's intermediate, really, really inconsistent, right? I know, over the next 20 days, which is a full trading month, over the next 20 days, let's say I take 20 trades. Out of those 20 trades, 15 of them will be exactly the same, right? The other 5, we're all human, we're all emotional. Sometimes we kind of get a little bit excited, go against the plan, right? But we were able to isolate those, right? Let me do this. There we go. So you guys can see me now. Or this one. No. Well, we don't want that one. Maybe too big. There we go. Right. But we could take, I could take 20 trades in a month. 15 of them will be exactly the same. 5 of them, you know, would be maybe against my plan, or I got a little bit emotional, right? We're all human. But the thing is that I can very, very easily identify those 5 trades that went wrong. For someone who's inconsistent, they'll take the same 20 trades, but all of those trades will be completely different. Different setups, different risk management, different targets, different stops, different tools, different ways of finding the trades, different markets, right? And it becomes incredibly difficult to actually figure out what's going wrong. Because again, it all circles back to inconsistent approach equals inconsistent results. Okay. So that journaling side, if you've got a consistent approach and you're journaling it, you can then figure out what's going wrong, what's going right, and then you can optimize. Okay. That's really, really important. So hopefully you guys understand that. Okay. Now, I know we're kind of going through like this probably little boring black screen, but it's really important that you guys understand why you're inconsistent, how to become consistent. And now I will show you through a trade plan template. Okay. Once I've gone through a bit of a trade plan template, I'll show you guys my strategy, my way of trading, my style. Okay. And I'll show you a few tools that I have in my arsenal as well. Okay. So trade plan template, let's go. So step number 1, essentially how to construct your trade plan. The very first thing you guys need to do is identify your trading style. Okay. Now, it sounds really, really broad, but this can be based around your lifestyle in general. If you're working full time, if you're super, super busy working shifts, right? You know, you don't really have a lot of time. You're managing children, etc., etc. You've got a lot of family commitments, right? I wouldn't recommend trading short-term, scalping, etc. Okay, I wouldn't recommend that because it requires time for you to be on the charts. It requires time for you to be actively managing the trade. You can think of more of like a set it and forget it approach. For someone who does maybe works from home, has their screens on all the time, you know, they can, you know, be doing a little bit of work whilst they're trading. You know, as long as they can dedicate that focus, that style is more readily available to them. But you have to identify your trading style, i.e., do you want to be a short-term, mid-term, or long-term trader? And this is all dependent on your lifestyle, what you want to get out of trading. Some people, you know, they really, really like short-term trades. I'm exactly that. Usually I'm in and out of trades within the day. I have the availability to do it. I've got the plan to do it. The results really suit me. It suits my mindset. It suits my emotions. Okay. But you identify your trading style. Okay. Once you identify your trading style, it's then about identifying opportunity or market. Okay. Excuse me. What I mean by this is doing your analysis and finding the best setups or the markets that are going to provide you with the most return on your investment, that have the highest probability of working in your favor. Okay. Some people just trade one market. That's completely okay. I trade about 25, right? There's a few that I really don't like, right? The way that I personally identify my opportunities is through currency strength. So near enough everybody in this chat, everybody who has joined on to today's webinar, you will have been made aware of currency strength, how we use it. We've got a WhatsApp group where we basically post, results and potential setups that we're looking at regarding our currency strength as well. Okay. What our currency strength does is it helps you identify the best opportunities in the market, what currencies are expensive, what currencies are cheap, and we compare them together. Okay. So once you identify the opportunity, we then move on to identifying direction. So let me, rather than typing it out. So we hone in our market. We find the market that we really want to get involved in, something that, meets our plan, something that's going to give us a really, really good opportunity. Then we dive into identifying direction. So hopefully it will update. Here we go. So by identifying direction, we want to figure out, is it going up? So is it trending? If I can actually type today, trending up, trending down, or is it going sideways? i.e., are we ranging? Okay. This is what we call, I'm just going to put a little note next to it, market context. Okay. This is so powerful. I can't put it into words. Seriously, can't put it into words how powerful and important it is for you to understand market context. If you're trending up and you're looking at an opportunity to short it, you have to understand, and you have to have that expectation that it's probably not going to go down for a long time. You want a short-term trade. Not to say that the opportunity isn't good, but you don't want to be holding onto the trade for a long time. If you're trending up and you see a long opportunity, a buy opportunity, then great, you can hold on to the trade for a little bit longer. If you see a buy opportunity and you're in a sideways market, again, you don't really want to be holding on to it for a long time. This is kind of the element a lot of traders miss out on and forget. They can identify a trend, they can identify whether it's going sideways, but they don't use that information to their advantage as to how they're actually going to manage the trade. I'll show you an example a little bit later. A really good example is USD yen at the moment. Overall, in my opinion, the market is going up. If you're going to be looking at an opportunity on USD yen, it's going up. However, this morning, really, really good short opportunity. Using a lot of our in-house tools, a lot of our, a lot of our different trading tools that have been really, really effective for us are giving us short signals, i.e. sell it. Traders who don't know what they're doing or don't use market context will take that short. It can be good, but then it can quickly turn against them and stop them out. For someone who understands market context, they can still take the short, but they can manage the trade effectively in and getting out quite quickly and still getting the results from it. Okay. That's really important. Really important. Okay. Now, the way that we identify direction is through a few things, right? So this is a template we all use. Higher time frames, right? Look at your higher time frames, understand what direction they're moving in. Big institutions, banks, investment banks, investment funds, they always work in the long term. In the long term, where is this market going to go? So higher time frames, you want to really be looking at like your key levels, support and resistance, trend lines, you know, anything kind of price action related, candlesticks, all of that good stuff, right? Once you have your higher time frames, this helps you understand the narrative. Okay. Helps you understand the narrative. Again, really important. Okay. Again, are we trending up? Are we trending down? Or are we moving sideways? It gives you so much information as to how you can manage the trade. So when you are getting a certain setup happen, you can understand, okay, how can I take advantage of the trade? How can I manage it effectively? So I can still get my income. Any questions that are going into the chat, guys, we'll either answer afterwards or I will pop a link to my direct WhatsApp in the chat straight after the webinar. So if I'm not answering anybody's questions, don't worry. There's still quite a lot to get through, and I want to make sure that we maximize the time is all. Okay. So understand the higher time frames, narratives. This is, like I said, key levels, price action, candlesticks, all of that good stuff. Okay. People, you know, loads of people are familiar with like loads of free YouTube content with smart money concepts, all of that. It works if you use it in the right way. Okay. Right. Then we have the section I like to call hone in. So this is where we essentially zoom in on the lower time frames. Okay. We zoom in on the lower time frames and we find and identify a more precise price dash entry. So we're kind of investigating a little bit further. If it looks good on the high time frames and it's obvious, okay, and it looks good, we want to go down into our lower time frames and then we want to hone in on price. We want to go, okay, these are the tools that I need to use to find where my entry is going to be. When the market hits these certain areas, I need a certain setup to happen, which will come in on now, right? In terms of you know, different tools to use, as I mentioned earlier, these are the sorts of areas where you can bring in additional indicators to help you out. So again, I like to use Trade Detector. I use the LTI indicators. So we have automatic support and resistance, automatic trend lines, daily trading range, and automatic Fibonacci as well. My favorite is automatic Fibs. Okay, so Fibonacci, specifically Fibonacci retracements. Okay. You can use moving averages, MACD, RSI, stochastics, whatever you like, right? So many different indicators out there, but it's really important that you understand what tools to use in a certain market. It all comes back to market context. Some tools work better in a ranging market. Some tools work better in a trending market. Okay. Right. Now, finally, or we're near the end of this template, right? We have the setup. So once you've honed in on price and you've found that kind of perfect area where you're very, very confident price is likely to go in your direction, or you're happy that you found a specific entry, that's where you look for your setup. So this is precise entry criteria to press by sell. Okay. That's all it is. Loads of people come to us and they say, hey, look, Dan, Andy, Laszlo, all of our coaches, they go, Dan, all I need is a strategy. All I need is your setup and I'll make money. It's like, all right, we can give you the setup, but it only accounts for about 10% of the overall picture. Okay. They're missing out on all of this. You're not going to make money just off of just the setup. The setup is like the cherry on the cake. It's like the last part. Okay. Now, I recommend that your setup, again, follows KISS, right? Keep it simple, stupid. Yeah. And on top of that, something that makes it very easy for you to execute. So an option is you can create some sort of checklist of what you would like to see in a setup. So let's say you can have a checklist of, let's say, 5 confluences, right? So this can be a mixture of support and resistance. It can be trend lines. It can be a candlestick formation. It can be our trade detector, for example. Okay. It can be Fibonacci, right? And it could be, I don't know, like channels or something, right? Or Bollinger Bands, right? Different tools. I would always recommend, like rule number 1, every trade that you take should be price action based. Price action is king. Every single trade should include some sort of price action element, okay? Now, when you create this checklist, you can turn around and you can say, like, look, there's no such thing as a perfect trade. You're not going to get all of them, right? You're just not. But you can get the majority. You can go, okay, well, if I only have half of my checklist filled out, it's not good enough to take a trade. As soon as I start to go above half, and you can provide a scoring system or just a simple tick, whatever you prefer, right? You can go, okay, fine. Well, all I need is, let's say, 4 out of 6 or, 7 out of 10 or whatever in order for me to take a trade. So if I get support and resistance, if I get a nice candlestick formation and I get all my trade detector and we're at a fib, that's classed as a really good, that's classed as a good trade, right? If I have an additional channel in there, like a diagonal support and resistance, that becomes a better trade. But if I then get a signal where, like a trend line is there and Bollinger Bands all line up, it's like an absolutely excellent trade that you should click to enter on that every single time. All right. It's just a very, very easy way for you guys to execute the trade. So you can have just a very simple checklist of different tools that you like to use, and you can take it from there. Okay. Now, finally, when you guys have found your setup, you then move on to risk management, i.e., risk per trade, risk to reward. Okay. We would recommend no less than, if you, put 1% on a trade, that you don't exit out of that unless you've hit at least 1% as a return. If you're risking 1% and then your reward is 0.5% every time, in the long run, you're always going to be losing money. It's going to be really difficult for you to make money. Okay. But if your risk to reward is, let's say, a 2-to-1, or a 1-to-2, if you're risking 1% and in return you're getting 2%, fantastic. 50% win rate, you're making money. All right. Risk management is really important. Again, it's kind of like the finishing touches, the decorations on the cake. Say, hey, look, this is all the work. This is my setup. This is everything that I'm thinking the market is going to do. now does my risk add up? This is how I'm going to manage my capital or preserve my capital. The most successful traders that I've ever worked with all have one thing in common. They all have a unique trade plan, and they all understand how to preserve their capital, i.e. keep their money safe. All right. Really, really important. And then the last bit is journal. And learn. For all of that stuff that you guys do, for all of the work that you guys put in, it's really, really important that you journal it, you learn from it, and you optimize. Okay. So this is your template. This is a lot of information. Totally understand. I just want to use the remaining time to actually take you through the markets. Has anybody fallen asleep yet? Or are we all good? I can finally take a little bit of a sip of water, I think. Good. Just put a yes or no in the chat if you found it valuable, if it all makes sense. And then we can put it into real time, okay? Just so I know that you guys are awake. Amazing. Not all of you are asleep then. Great stuff. Amazing, amazing, amazing. Thank you. No, I appreciate the kind words, guys. Thank you. So, right, on to the good stuff, right? These are the trades that we want to try and find within the market. You know, we'll do some active analysis, and I'll show you essentially my trade plan, the way that I like to trade. All right. So let's get rid of all this stuff, and we can look at some markets. So the very first thing that I look at is currency strength. So we're going to be focusing on a bit more of a longer term trade, right? So remember, identify the opportunity, identify what market you want to get involved in. So we actually use a couple. We use currency strength. We've also recently released kind of a beta version of some scanners as well, which I can very, very briefly show you. So it's within our Discord. So we actually have some scanners here. They're not publicly available yet, but it just shows you kind of what's going on in the background of London Trading Institute. And anybody that kind of wants at least beta access to them, they can you can just reach out to me. But we have, for anybody that's familiar with Trade Detector, we have a essentially a scanner that gives us an alert when, you know, like all of our three signals align. So we got here's quite a good one. We've got a buy signal on Euro GBP on the 6th. So you can use that even to identify the opportunity and say, hey, look, okay, we've got a really, really good signal on Euro GBP. You know, looks really, really good. I'm going to dive into that market, analyze it, see if it's a really good setup. So let me take you into the markets. Let's just really, really quickly. So it happened on the 6th. It was 2 days ago. But you can see, this is a 15-minute. We want the 1 hour. You can see on the 6th, we got that alert. The market went up. Okay.
Hey, how's it going?
And we had a really, really good setup there. Okay. And you could have, you know, jumped into your charts, identified, done all of your analysis, gone through all of the different steps in your trading plan, and then identified it. We can just take a brief look at maybe another one. So we've got I think we ended up getting one on gold the other day. Yeah, we've got one on gold. Quickly take a look at that one. Let's take a look on the 1 hour. Look at that. Yeah. So that's the signal that we got on gold. And look what's happened here. Again, the market has completely dropped off. Really, really positive. All right. So we're offering these out as like a beta. Anybody that's interested, I'll tell you what. Let me just quickly grab my direct WhatsApp number, and then you guys can drop me a message if needed. So here you go. Here's my my direct WhatsApp number. Okay. And then we have kind of all of these alerts built in, and we're building out so much more as well, right? But just shows you like a brief idea. Look, you can have a scanner, can show you the opportunity, or alternatively, how I like to use it, especially in my longer term trading, I use currency strength. So we can look at maybe sells on the pound. Pound is in a really, really good sell area now. We can also maybe look at buys on USD or buys on CAD even. So we can see that pound is in our red area, i.e. looking to sell pound in the long run. And we can look for buys on the Canadian dollar. This basically means that if I actually take my camera off, you guys will be able to see it. There you go. So you got CAD in green, GBP in red, sell GBP CAD. So let's dive into the market and let's see what we can find. Okay. Don't worry about all of this. We'll put our trade detector on and we'll find the market that we want to get involved in. And the next step, once we've identified the market, we want to go into our higher time frames. So I recommend monthly, weekly, daily. I quite like the weekly. Gives us a really good sort of outline as to kind of where the overall direction of the market is and what our market context is. So we can then put in some automatic support and resistance. So again, we get an idea, you know, GBP CAD, we've got the idea to think about selling this pair. Had a really good rejection off of 1.8581. So that's definitely something to look out for. If we come up to 1.8581, that could be potentially another good selling opportunity. The last few weeks, especially last week, was pretty bearish as well. So we ended up having, you know, quite a bearish close. We can potentially expect for that bearish market context to still kick in. Okay, so let's take a look at the daily. Okay, interesting. So we're going to put on our daily support and resistance here as well. And again, our daily support and resistance has picked up again another really key level. This bit of software here is something called our trade detector. So our trade detector draws automatically in like our different channels. It also picks out these red and green squares. Trade Detector 3 helps us identify an overbought or oversold scenario. So that's usually the arrows that you see on screen. So that red arrow was when we get this pink signal. If we zoom out, I mean, we don't really get many signals on the daily regarding that. So that was crazy. And then Trade Detector 5 also helps us pick out those overbought and oversold scenarios as well. Okay, so not only do we have a key resistance level at 1.8587, but we actually have some support of resistance a little bit higher up, more towards kind of the 1.86 or 1.87 is a nice round number. Okay, and you can see that Trade Detector is also providing a little bit of diagonal support. Let's take a look back and we can see that again, yes, we went a little bit past it, but acted as support. Again, acted as support. We break it, we act as resistance a couple of times. Again, we break it, act as support, we break it, act as resistance. So at the moment, we can say based on what we see on CSI, identifying the opportunity, based on what we're seeing on the higher time frames, looking at an entry from 1.8587 looks pretty decent to start off with. All right. Okay. So then we can go down into our one thing that I haven't done is just take a look at our automatic fibs. So we can put our Fibonacci in, get an idea for overall price, where we're moving to, and we can put our down fibs on as well. Let me put the down ones on. Okay. Okay, so we're still in this down fib cycle. I'll pop on our 4 hour. Look at that. Look at what trade detector's picking out in this area here. Look at all of these confluences in this area. We have trade detector giving us a resistance area, and we have that key resistance area picked out by our automatic support and resistance as well. So this as a reversal area looks pretty decent. Looks really quite good. Okay. So we can put in our up fibs, which we can actually draw. So our up fibs here, saying we're not going to really finish our up cycle till there, but we can draw in just a bit of a smaller cycle. Don't worry if this is too advanced, guys. We actually teach this quite a lot in our programs. Okay, so we've got, again, kind of a fib D in that area. So basically, if I'm looking at taking a short on GBP CAD, what I want to see is I want to see price come up into that area. That's a nice high probability area. We're honing in on price. We're saying, right, where actually is this market likely to react? We can now go into the setup. So I like to use Trade Detector as one of my main setups for this style of trading. Okay. So what I like to look for is I like to see what we saw on those scanners. I like to see 3 signals pop off on Trade Detector. We call it the rule of 3, right? I want to see Trade Detector 1, these red squares, give me a big green, or in this scenario, a big red square when we hit that area. I want Trade Detector 3, so that's Trade Detector 1, sorry, Trade Detector 3. I want this to give me a big pink signal with an arrow. And I want Trade Detector 5 to push up into that area. If we get that, that is a very, very good trigger for that sell. Right. So if I were you, I would look at GBP CAD as a potential opportunity to sell it. Now, look, there's nothing saying that this market could go higher. We could end up going higher, maybe even to 1.87. We're seeing on the 4 hour time frame that our Fibonacci D point is actually at 1.8747, so a little bit higher than that. All right. But I'm in the business of predicting, or I'm in the business of probability, not prediction. Well, probably there's a nice trade setup there. And it gives us the opportunity, maybe even today, to take advantage of that. If the trade doesn't work out, or by the end of today, it's not, really doing anything, we can look to manage the trade effectively, and we can look for maybe a better entry up here if it doesn't work out. But as part of it being a successful trader, you need to have the ability to be disciplined and take action. When you see the opportunity, you need the ability to actually click the button, okay? Or put your order in where you're confident. So we can add a few, additional confluences to this. We can look at our daily trading range. So our daily trading range is a really good tool. We've had some really high impact news today with Bailey speaking. Hence why you can see like these crazy moves. So this is our 1.5 daily trading range, and you can actually see that our 1.5 DTR is around this area. So essentially, if we end up going past that, this predicts the most likely extreme high of the day, and the green predicts the the most likely probable low of the day, right? So in this area, our DTR, our daily trading range, is saying based off of current volatility in the market, this is where the most extreme high of the day is likely going to be. However, we found a nice price action area in there that's higher up, i.e. it's a better price. It's even more extreme. If we enter into that area, fantastic. That is a much higher probability trade that's going to make you more money. So this is a really, really nice additional confluence. Okay. All right. Neil, are you having the up and down fibs all the time or only applying the correct fib with the Danielle? I have up and down fibs on all the time because they always provide key levels, but it's just down to, you know, what your preference is. You know, some people think that it's a little bit too much on the charts. Completely get it, but you know, as you know, if you're a bit more experienced, you can have them both on, because they always provide kind of key levels that the market is going to react at. So hopefully that answers your question. All right. So that is a prime example of a trade plan, a prime example of how I find trades in the market every single day. And we can see it kind of happen time and time again. You know, we can look at, again, those scanners for what we saw on Euro GBP. Let's just take a really quick look at Euro GBP and how that reacted. So template plain, we'll put our trade detector on. So we have kind of some preset templates that we like to use. Euro GBP. Okay.
Where did you find that the parts are missing? Where were they referenced?
Euro GBP. Here is where we were looking. So that's a 15-minute time frame. We'll jump to the 1 hour. 1 hour time frame. Look, we had all three signals pop up in that area. And we could have taken advantage of the trade setup the whole time. So we could have entered on the close of that candle. We could have entered on the pullback, or maybe even down here. It gave you a second opportunity to enter. The trade detector was providing a double area of support before we went up.
So we have one.
And then you can use trade detector also to help you out with your take profits or your stop losses. Okay. Let's see if we can find maybe even some additional examples of trade detector working. Sometimes it doesn't work. Like it's sometimes, you know, things don't go the way that you want and you take losses in trading. We've got another one here, Euro CHF. Let's take a look at that one. Euro CHF. Bang. Here we had trade detector support. We had everything kind of align within trade detector. You can see just based off of this, you know, even if we use the 4 hour, just very, very quickly, 4 hour support and resistance, or daily. And then we'll go down into the 1 hour as well. Okay. You can actually see here, look. We bounced off of a daily support level too. Again, it's an additional confluence, you know. We put our down Fibonacci on. You can see that the market nearly very, very close. Some people would class that as a D point, but it basically hit its Fibonacci D. So it ended its market cycle. Again, it's an additional confluence, okay? You can look at stochastics, you can look at pivots, you can look at MACD. You know, let's see what the MACD was saying as well. The MACD gave us a signal a little bit later on. You could have used the cross of the MACD to just get in on the trade. Very, very simple, okay? So guys, we've ran a little bit over time, so I apologize for that. But let me. But hopefully you can see value in that, right? So for anybody that found it valuable, again, just drop me a message on WhatsApp directly. More than happy to help point you in the right direction. We are releasing the scanners, at least for Trade Detector, out as a beta for people to inquire about, sign up, provide a little bit of feedback. Personally, I find them really, really useful. For anybody that's interested in taking advantage of like Trade Detector or Currency Strength, again, just get in contact with me for any questions, and I'm always more than happy to help. But as always, guys, I really appreciate you guys joining. I have really enjoyed today's session, and hopefully you found it valuable. Recording will be made available just after, so that will be emailed out to everybody today as well. And if you have any questions, again, just don't hesitate to reach out to me directly. Again, I've just put my my WhatsApp in the chat, and I've pinned it just here. So just click on the link, copy and paste it. You know, the digits are my number. So just drop me on WhatsApp if you need anything. And as always, I'm more than happy to help, guys. Thank you for joining. Have a fantastic rest of your week. Have a fantastic day, and hopefully we'll speak soon. Take care, guys. Thank you for joining.